You're watching Masters in Trading Live with Jonathan Rose.
Hey guys, it's Jonathan Rose. Welcome to Masters in Trading Live. I get on here each day the market's open, go over the market, share some thoughts. Once in a while, we'll share our trade of the day. I got the chat open. Everybody can see me okay? Cool. Dennis, Ernie, Chandra, Livy, Dwar, John. Thank you guys all for joining me. I love getting on here 10, 15 minutes early, chat with the group, see what everybody's watching today. So again, my name is Jonathan Rose. I grew up on the East Coast of the United States. I moved to Chicago when I graduated college. I went to the University of Miami. I moved straight to Chicago in 1997 because I needed to be on the exchanges. I've always had a heart for risk taking and knew forever that I wanted to be on the exchanges. So I came out, I worked on the Chicago Mercantile Exchange. I worked on the Chicago Board of Trade, the Chicago Options Exchange. I've worked on all the exchanges out in Chicago, and I bounced around because I'm always looking for that different edge. I always like to say that people aren't just one kind of trader. You're not a NASDAQ trader. If you learn to trade, if you learn to value markets, you could trade anything. That's why I bounced around throughout my career. That's why we like to say the creative trader wins. We want to look at the market different than everybody else. A couple of topics I'm excited about today. For one, my favorite stock right now is a stock called QXO. I call it QuickSo. QXO. I'm going to go over QXO. We're going to talk about divergences. Throughout my entire career, I've traded for 27 years. Throughout my entire career, I have never just looked to buy or sell a stock. I think there's a binary outcome. I think that's a very, very difficult way to invest or to trade. Throughout my entire career, I've looked at things as divergences. One thing relative to something else. What you probably don't realize is when you've been buying stuff, big items, your entire life, you don't look at anything in isolation either. When you go look for a car, you don't look for a car without valuing that car against its closest competitors. You don't look for a home without valuing that new home against other homes that have sold on the block. So everything that we do in life, we do as divergences. What I want to do in the market is make sure we continue to use divergences to value like products. So here we go. Let's go to the screen. Let's have some fun. 1 second. A little background noise. I just closed my door. Hopefully that calms everything down. Ooh, this is why we got a market, guys. We have one bullish and one bearish for silver. So let's see what we got. Okay, before we get into that, let's talk about QXO. QXO, can I get a show of hands? Who's involved with QXO? QXO. QuickSo. On the floor, by the way, when we talk about different tickers, we're always talking about them in names. So people aren't yelling out QXO, they're saying QuickSo. People aren't yelling out RUN, they're yelling run. ASHR, they're yelling Asher. Look at everybody in QuickSo, QXO. Perfect. Okay, so QXO, we shared this trade with everybody on 5/19. That at the time was trading at $16.86. Since we've shared the trade, QuickSo went up and traded 19. At 19, the company raised $1 billion. That's why the stock sold off. They got their $1 billion because QXO is on a mission to consolidate the building industry. So right after it raises money, it's straight right back up. QXO, we are long this in our free portfolio. This is the free portfolio we get on every single day. Also, in our all access, in our paid up, we are long options on top of options on top of options because I am extremely bullish. QXO, if you're not in our community, I think QXO trades $40 and above. That's how high this sucker is going. So if I can tell you anything, patience. Enjoy the ride. Like we say, it's okay to make a whole bunch of money on one trade. That's QXO. I am super confident about it. I love that trade. Patience, my friends. Let's push on. Divergences. I look at the world through a divergence lens. So what do we have in front of us? Let me show you. Gold is right here. Silver, platinum, going back to 2023. Going back to 2023, we start them all at the same point. Okay, we start them all at the same point, so we can say, on your marks, get set, go. And then they all start going together. What happens? Gold is really strong, right? Okay, silver is following. Right here, gold and silver are back to trading the exact same level, just like they were here. But then what happened? Gold strengthened. Silver strengthened not as much. After Liberation Day, gold got really strong. Silver did not. We are bullish, bullish, bullish on silver, not gold, and then platinum as well. If anything, gold is expensive, so expensive. If you're long a metal, not gold, not gold. Gold's expensive. Silver is still inexpensive. Copper is still inexpensive. We like staying long any other metals except gold. That is what we're looking at, and we look at those through divergences. In front of you, those are three different products, right? Gold, silver, platinum. Well, we could also look at divergences like this. This, instead of having gold, silver, come on, Mr. Penn. Okay, instead of having gold as one line and then silver as one line, we're looking at it different, because here, this chart is looking at gold minus silver. And it's actually pretty cool because I'm looking at the futures contracts, and the futures contracts, one gold equals one silver. So you don't need any funky ratio. It's not like 3 gold to 1.5 silver or 5 silver to 2.5 gold. It's not weird. It's not complicated. It's super straightforward. But if you look at the spread, one over the other, going back again, 2023, when we say on your mark, get set, go, fine, they traded the same throughout 2024, but then gold got super, super, super expensive relative to silver. So if you think that this will continue to happen, this has been a tracked relationship from the 1800s. If you think this line continues to go way, way higher, well, then you want to be long gold, I guess. I don't. I think that inevitably this comes way down, and therefore we love being long silver. And if you want something to be short, short gold. That's the way to trade what's called the gold versus silver relationship. It's a phenomenal, phenomenal trade. And for those who have been consistently watching over the last 3-6 months, you've seen this trade play out in real time. I got one more for you guys. Silver versus platinum. Platinum, you could trade the future, but you could also trade ticker PLTM or ticker SBSW. Two companies very correlated with the price of platinum. If we go back to 2023, we start the race again. Ready? On your mark, get set, go. Silver strong to platinum, comes back. Silver strong to platinum, it comes back. It comes back. Comes back to even, comes back to even, it comes back to even, it comes back to even, it comes back to even. Oh no, what just happened? Wow. So now you're saying, if you want to take advantage of this, again, buy silver. So you don't want to buy platinum. You don't want to buy gold. You want to buy silver. You want to buy silver. You could do silver against platinum, but overall, we are still staying long on silver. Hey, Dennis, JR, how will a drop in interest rates affect metals? I don't know. It's a very general question. It's a good question. The way that I would look at that is I would look historically when rates drop, when bonds go up in price and down in yield. Look, what does that do to the metals complex? Okay. Oh, short-term option trade, guys. I'm going to share this with you. We were able to take it off this morning. We shared this trade 7 days ago with our short-term options, and we did a trade in UNFI, UNFI. UNFI, all we did, guys, is we bought the 30 strike puts, boom, betting on this to go lower, and we bought the 32 strike calls, betting for it to go higher. Stock goes lower. We got in at, what did we get in at? 385. And this morning, we took off those puts at $4.50. So congrats to everybody that was able to take advantage of our UNFI trade in our short-term options. You get a Glockenspiel. Very, very exciting. Let me hop back on live. Oh my God, do I have an exciting announcement. Do you guys remember the MIT Challenge? Who was here and took the MIT Challenge? We rolled this out in November of 2024. We did a 7-day challenge to learn options. Well, I got an exciting announcement because we're going to do the same thing all over again. And it's called the Big Money Tell. So hopefully my lead editor, Chris, is going to drop a link in the chat. And you guys, please watch the video. We are reopening the Mastered in Trading Challenge. We've been working on it for the last 9 months. Now, the only downside, guys, we're only taking 100 people at a time. So watch the video, go through it. We're only taking 100 people at a time. You're going to love it. But if you took the challenge before, the feedback on the challenge to learn options, to learn the Big Money Tell, the feedback was phenomenal. Well, we just put 9 months in it, and it is way, way better with all new videos, all new content. So we'll get the link out to you guys. Check it out, the Big Money Tell. I am super, super excited about this one. For everybody in our All Access, you guys don't go anywhere. We're going to talk about some of our open earnings positions. Thanks, everybody, for watching. I'll see you guys live tomorrow.